Some prices move like numbers on a screen. Others, like the recent 7.40 pesos for RL Commercial REIT, trade more like messages. When Robinson's Land made its secondary block sale, nearly 1 billion shares at 740 pesos each, what looked like a simple capital recycling became a moment of pure price discovery. The market's question is simple, almost relentless. Is 7.40 pesos a durable floor for RCR, or just another mile marker on the journey? To answer that, we need anchors, hard data, not just sentiment. Fortunately, RCR's own disclosures give us two: NAV and dividend yield. Start with NAV. As of the third quarter, RCR's net asset value per share stands at 7.19 pesos. The accompanying market price, 7.26 pesos on the same date, tells us the stock trades almost exactly at its underlying asset value. No wild optimism, no panic. And that block sale at 740 pesos? It's a premium, not a discount. In the world of REITs, a sale above NAV signals investor confidence, either in the stability of cash flows, growth prospects, or both. That's why 7.40 pesos acts as more than a number. It feels like support. But in REITs, premiums are fragile. They persist only if investors believe future cash returns will keep pace with portfolio growth. This matters even more for RCR after a year of aggressive expansion, mostly funded by equity. The second anchor is yield. RCR's trailing 12-month dividend was 0.4166 pesos per share, translating to about a 5.7% annual yield at recent prices. Consistent, attractive, yet it sits just below the 10-year government bond yield of 6.03% at the time. So why did institutions still buy? Because sometimes, investors accept a slightly lower yield in exchange for stability, long lease expiries, and confidence that dividends will, eventually, climb higher. There's substance backing the price. High occupancy rates, long waileys, and revenue growth driven by portfolio expansion and rising rents. Investors and traders alike see numbers that justify a stable floor. Yet, every floor faces a test. For RCR, it's dilution risk. Large property swaps have boosted the share count, putting pressure on per-share dividends. The story shifts if investors sense the next growth chapter relies too heavily on issuing more shares before returns catch up. Strategically, RCR leaves room to maneuver. Low debt means future growth can be funded with leverage as much as equity, reducing dilution risk and supporting higher valuations. So, is 7.40 pesos a true floor or just a stop along the way? If RCR keeps delivering steady dividends and avoids surprise dilution, 7.40 pesos will hold, quietly, uneventfully, as institutional reference points do. But any shift in bond yields, risk appetite, or growth funding mechanics could turn today's floor into tomorrow's memory. In the end, 740 pesos isn't a prophecy. It's a calm midpoint, bracketed by disclosed NAV and reliable dividends, an anchor for traders and a test of trust for long-term investors.